Hi, welcome to the Market Alert for Monday, the 28th of August 2017. So today the UK is going to be closed, and therefore we've just got the US markets open as normal this afternoon. We're going back to Friday. We saw the start of the Jackson Hole Symposium, and Yellen started to speak at 3 p.m. This signal was just before it. You can see the pound's reaction. Obviously the dollar moved lower and the pound moved higher, so this signal not valid as Yellen was about to speak at 3 p.m. However, on the overnight, the pound has gapped higher, and this is generally indicative of the market moving lower. You gap higher, suck in the weak traders, think the market's moving higher, and then they drop the market on them, and that's exactly what we've seen on the overnight, the market moving lower. And even a bit of a bounce at the start there of this morning's session has seen the market starting to show a bit of weakness once more. In the daily chart, so you can see the gap higher. You can see exactly where it is as well. It was just above the 20-bar average, and now the market is trading below this. Again, watch for this 76% area if the market moves lower. Also, the 62, not as important, but as it's marked up there, just keep an eye on the 128.46 level. As the UK is closed today, final bank holiday of 2017 before Christmas, which obviously we have a few holidays there, but this is the end of the bank holiday run, then you may find that the market is going to be fairly quiet. And also, if you have a look at the news, you can see there we've got confirmation of the bank holiday and just the euro money supply figures out at 9 a.m. Meanwhile, on the Dow, you can see on Friday, again, Jackson Hole was out. The market did move higher. This sent the Dow higher to 21,900, which is this level. Market became weak and then moved lower, and as they continued to speak, then we had Draghi at 5 p.m. And the market just went into a sideways move, as you can see there. And again, no point in being in when you've got these central banker individuals. I'll be polite speaking at these events. Of course, it's the same rhetoric. They think they've saved the world. Their policy of QE and inflating asset bubbles around the world has worked perfectly well. Everybody's better off. There is more resilience in the system. And yes, we've heard it all before. This is starting to sound very much like 2008, when we had the other asset bubbles, the housing and stock market bubble. Now, we didn't have the bond bubble so much then. We certainly do now. And, you know, again, they were saying the very same things. There was economic stability. We had Yellen not so long ago coming out saying there would never be another economic crisis during her lifetime. Either she's not going to live for much longer, or she really believes the nonsense that she's spouting. It's as simple as that, really. And then finally, the implied volatility. But just before we do that, let's have a look, see what we've got coming out for the remainder of the week. The big one is going to be Friday. We've got the non-farm payroll figures. So again, we could be slow up to this point. Important numbers here. Previous 209, they're looking at 180. Again, they do this every time with these figures. They have a, whatever the figure is, they seem to put in a low one. In this case, 180,000 over the 209,000 official last time. The last time they projected 180,000, it came out at 209. Oh, this is good. Oh, unemployment, yeah, it's dropping. Again, part-time jobs, most of them. So keep an eye out for that one later on in the week. That's going to be the big one. And then finally, we've got the implied volatility. This down again to 872, down from 926 from Thursday. So again, we've seen another down day. That's because the market was fine. Brilliant article on Zero Hedge today from Jim Rickards as well about selling volatility, how it can become very expensive, because when this thing blows, it's going to be a big one. And again, no surprise there for me, seeing this since 94. The only difference is we've never seen it so prolonged and sideways, and all that means to me is that when this goes, it's going to go with such a bang. It's going to catch most of the short sellers of volatility unawares, and selling volatility at these levels is financial suicide. There is absolutely nothing. If you're going to sell volatility, sell it when the implied volatility has doubled and everybody thinks that the market's going to continue to move lower, but once it's doubled, the market finds stability and then comes back, and that will be the case as and when this actually takes a hit to the downside and the volatility explodes to the upside. I mean, we can see here recently when the volatility went from 7.74 to 10.96, not a lot in percentage terms, but if you're actually short, it is because it's one of those situations where you're caught unawares, and most people keep selling the volatility trade. They've done very well over the last year, but as Jim Rickards rightly points out, that it only takes one event, one black swan event or whatever, to come out, and this can move higher. I mean, you only have to look back at 10 years, just move over to the 10-year chart, and you can see precisely how these spikes come out of nowhere. And once that implied volatility has doubled, this is the time to sell volatility. You'll see it move back down, the market move back up, and the same in all of these scenarios. Market down, volatility up, market down, volatility up, and then you sell the volatility. You don't do it before that. And of course we've got the biggest volatility of all time, and that's when the system fell apart. So, and this will probably be dwarfed when the next one comes along as well. Got record lows down here in the implied volatility going all the way back to 2006, and that again speaks volumes that we're on the cusp of something major, either through September or certainly October. There's going to be a big correction in this market. If not, then it will confirm to me that the market is no more controlled by the traders, and the central banks have complete and utter control over it, as they do in Japan, where they own most of the stock market now. Right, that'll do it for this one. I don't think there's going to be a lot to report today. The market is down as far as the Dow is concerned on the overnight. That could be turned around. Generally the market goes up because there's nobody to sell into it, but if the market is not believing the Jackson Hole rhetoric from Friday, who knows, there's certainly weakness around as well, and it could continue lower, but we'll see as we go through the morning how things pan out there. Right, that'll do it for me for this one. As ever, thanks for watching. See you in the next one.